Hey folks, it's Simon here with your Tao Daily edition for Friday, the 26th of July, 2024. Well, we got a bounce in the major indices that we talked about yesterday. To be honest with you, it wasn't super impressive. You can see here on the SPY, it's an inside day, all right, which just means today's price action, the high and the low, were contained completely within the previous days. So it just tells us the market's a bit undecided. Yeah, it was up 1.12%. Doesn't change the technical picture. If we look at the Nasdaq, same sort of phenomena here. Yeah, we were up 1% on the previous day's close, but you can see the Nasdaq here, or tracking the Qs, which is the ETF that tracks the Nasdaq, basically closed right where it opened. Another inside day, so just signaling indecision more than anything else. So we'll need to wait till next week to see if this bounce can kind of shape up into something more material. Right now, the market is really on the fence. Now, one thing to note here is that the economic data really doesn't matter. If you look at Thursday, we had second quarter GDP print at 2.8%. The market was expecting 2%. Now, I couldn't even tell you right now whether that's a bullish or bearish for the stock market. Are we still in a bad news is good news paradigm? Yeah, we probably are. So maybe at the margin that was bad news. I don't believe that was the reason why we had a sell-off yesterday. Having said that, but if you look at today, we had a slightly cooler PCE print. PCE came in at 0.1% month on month, which was, well, that was in line with expectations. Core PCE year on year came in at 2.5%, slightly cooler than market expectations at 2.6%. Core PCE month on month came in at 0.1%, again, slightly cooler than expectations of 0.2%. This is relevant because core PCE is supposedly the Fed's preferred gauge of inflation. And if core PCE continues to come in cooler than expected, it just gives the Fed more ammo for rate cuts. Whether the market's excitement around rate cuts is well placed is another argument. 500 basis points of hikes didn't kill the market. It seems unlikely that 200 basis points of cuts is really going to set it on fire from here. But really right now, the market technicals are in the driver's seat, and I think what happens in terms of whether this bounce develops or whether the sell-off continues is really going to be far more meaningful than a whole host of data prints. Now, we do have the Fed next week. I mean, the Fed meetings are always consequential, of course, but really nobody's expecting a rate cut for July. September is seen as pretty much a lock. So only to the extent that Jay Powell says anything to change market expectations around a September cut, really do I see that upsetting the apple cart. That's what I got for you. I hope it helps, and I wish you a great weekend.